Mr. Akash Agarwal, the whole-time director at the company, joining us on the show. Akash, it was a very impressive show, and first up, best wishes for 2024. But the growth that you registered in 2023 last quarter was around 46% on same-store sales growth. Explain to me, how did you manage to deliver that kind of growth when your peers, or at least the other retailers, are languishing at sub 5% kind of SSSG?
Yeah, actually the number is 47%. And I would say, the last 3 years was about consolidating and reinventing ourselves. And we worked on a lot of different pointers, be it supply chain, be it inventory management, be it product development. And we also focused on giving more value to our consumers. So we've also reduced our gross margins. So I think it's a combination of all the factors, and we've been consistently showing same-store sales growth for the first 2 quarters, and it had been getting better. And third quarter, because of festive demand and winter demand, we were able to post like amazing numbers. And we hope that this trend continues going on into the fourth quarter and then FY25.
Okay, last year was a lot about transformation, but my question to you is, this kind of growth rate sustainable now, above 40%?
So of course, the same growth rates won't be sustainable because the base changes. So as your base gets higher, it's not possible to maintain the same growth rates. But going forward, also we are looking to maintain a double-digit same-store sales growth. So I think that's our main target, and to also grow revenues at about 30% every year.
Just one more thing, if you could just clarify, was this same-store sales growth also led by higher price discounts or price cuts that the company had taken during the festive season?
So I wouldn't say there were price cuts, but there were a lot of marketing offers that we are giving to the customers. So we ran a couple of bill buster offers where we were giving free gifts to customers. So there wasn't a big margin differential, but it was mainly that led through a higher footfall at the store level. So we saw almost 40 to 47% footfall growth because our ABV is the same. So average bill value remains the same. So it was more customers are entering B2, and there's a word of mouth marketing that's happening because people are realizing that you get the best assortment at the best price at B2. So that has really been helping us.
That's good to know, but do you think, what is attracting the customers? Do you think it's just those bit of a marketing discounts that you're offering, or are you expanding in terms of the products that you have, the SKUs? What are you doing differently in the last 1 year that has led to this increased footfall and word of mouth?
So the biggest change that has happened is earlier the product development, like the designs developed in-house, used to contribute only 10% to our sales. Now that contribution has gone up to almost 35-40%. So those are designs that you only get at a V2 store. So I would say the biggest driver of this growth is the assortment. So assortment covers everything from the colors that we're offering to the customers, the price that we're offering to the customers, the kind of designs. So we are trying to cater more to the youth. We are more up to date with the latest fashion. So we are following the trends. And obviously, there's also the supply chain that ensures that we maintain the fill rate at our stores.
So given that your own design sales are more in demand and more sales are happening for those kind of products, will it also benefit your margins?
So currently, whatever margin benefit that we are getting from producing on our own or doing our product development, we are transferring the complete benefit to our consumers. Because the next 3 to 4 years, our focus is only on increasing our market share and to get a market leading position. Because we want to increase our per square feet sales and maintaining a gross margin of 29 to 30%.
Those per square feet sales figure have genuinely shot up quite a bit, almost to a 4-digit mark versus 700-800 range that was there earlier. A couple of questions there. When you say you want to increase your market share, A, what does it stand right now? What do you plan to take it to? And secondly, in terms of the expansion plans, which are the areas and what's the run rate that you're looking at expanding going forward?
So I cannot give you the market share in percentage, but if we see more footfalls coming into the same store, we assume that we are getting more market share in that particular market. So currently we will close this year at around 820, 830 rupees per square feet. So the target for next year is getting around 950 rupees per square feet of sales. And talking about expansion, I think in the next 12 months, we should be opening about 25 to 30 new stores. and we are focusing on the existing clusters that have been doing well for us, because that really helps us with the logistics and the marketing part of it. And we already have a brand presence there, so people know what V2 is. So it's easier to mature that store. So we are looking at geographies like Bihar, Odisha, UP, and Jharkhand, which have historically done well for us.
CapEx that you would require to open this 25 to 30 stores, and will it be funded internally?
Yes, it will be funded completely through our internal accruals, because we are expecting about 8 to 9% EBITDA next year, and a turnover of about 13 to 1400 crores.
Okay, so 13 to 1400 crore turnover with 8 to 9% kind of margin profile with 25-30 stores lined up next year. Thanks so much for making time and speaking with us. Appreciate you joining us and giving us all those details, Akash. Good speaking with you.